Yeah, good morning, everyone. US market again saw decline yesterday, mainly driven by the increasing bond yield. In between, the bond yield increased to 1.9%, though the today right now it is at around 1.85, which was the case yesterday also. So the volatility in the bond yield has had impact, and also we are seeing that post the corporate results, though the results are comparatively okay, but we are seeing some profit booking over there. Market is almost down by around uh, 300 points from the top on the S&P 500, that is equal to around 6-7%, and also lowest in last 1 month, lowest level at in last 1 month. Futures are more of a flattish, but the Asian markets are showing some mixed trend, whereas Japan and Hong Kong are positive, whereas Australia, New Zealand, Korea, China are negative. Korea is more of a flattish. On the commodity also, we are seeing more of a mixed reactions. Oil is a bit down. It went up to as high as 89, and now it is at around, it has corrected marginally from there. Aluminum is down by around 1%, copper is up by around 1%, iron ore is flat, and steel is down by around 0.5%. So overall mixed reactions from the market across the board. Now I'll request technical team to take up from here.
Thank you, sir. Good morning, all of you. Yesterday we see some profit booking in upper level and Nifty break important support zone also. So we can expect some pressure in today also. We expect flattish to negative side if Nifty open, but downside immediate support place around 17,878.58 downside, and upside resistance place around 17,970. If Nifty break this level, then we expect further momentum, but upside next immediate resistance place around 18,040, 18,100 in next for Nifty. So we expect Nifty trading within the range. Today weekly expiry, we see some sideways momentum. Maybe Nifty close nearby 17,950 and maybe 970 range in weekly expiry. So we expect first half in pressure, and then the second half maybe see some bounce back at downside level. If Nifty break 17,850, 870 level, then close below that level in weekly expiry, then we expect further selling pressure towards 17,780, mark at downside. So we can watch closely this important level. Bank Nifty also trading the important support zone, near the support zone. If Bank Nifty also break 37,700 at downside, then we expect more pressure towards 37,300, 3,700 and down 37,000 in downside. Upside importance resistance place around 38,370, 38,500 for next important resistance for Bank Nifty. So we expect today Bank Nifty also trading within the range. Range is upside upside 38,500, and downside 37,900, 37,700 is important support zone. Nifty Finance also trading near the support zone. 18,000 is important support zone for Nifty Finance. If break that level, then we expect further pressure towards 17,900, 17,870 at downside. Upside immediate resistance place around 18,000, 18,180, and next important resistance 18,300. So we expect all three index open a slightly negative side, but remain a sideways during the day. In stock specific, Infosys looks weak at current level. 1900 is a next importance resistance, and support is 1830, 1820 at downside. C8 also looks weak at current level. Downside important next support zone is 1090, 1070 at downside. Resistance upside place around 1170, 1172 for next resistance level for C8. So we expect negative side in Infosys C8. TCS also looks negative at current level. So these three stock you can watch for today. That's it for technical derivative I can carry.
Yeah, thank you, Vikas. See, on the derivative front, as we've been saying, the negativeness is there. Um, Two things to note here. In the previous day before yesterday, on Monday and Tuesday, you had seen 18,500 had the highest fall base. Now that shifted yesterday to 18,300, and which has further shifted to 18,000 now yesterday. So, which is a bad sign for the markets. So this data is negative. You've seen very strong OI built up in all the calls upwards from 18,000 to 18,500 odd levels. Some tremendous amount of open interest has been built in. Almost every strike has more than 85 lakh shares, and some strikes have almost 1 crore shares. So that is an area of concern. We have also broken the 18,000 levels, which is also important. It was an important support area. Highest put base was there, but that has been breached, and we are opening down today. So we might see further selling, and probably there will be pain today. Some aggressive selling can come in into stocks, especially mid cap stocks where high amount of buying has gone in. So lot of selling can come in at those areas. The VIX continues to move up. It is upwards now, almost touching 18 levels, and it is likely to move up further up till budget, and probably further more as the UP election comes in. Now, looking at the stock specific front, the crude moving up, you're seeing good amount of open interest built up every time in ONGC. So we have been recommending this from the past few days, and it has been doing pretty well. So that is one stock to watch out for. Also, pharma as a whole looks good. Some good buying has come in. So good support buying is likely to take place here as well. So one can look to buy pharma. Also, from the short side, cement has broken important support areas along with open interest rise, which means negative bias. So ACC we like on the sell side. Also Tata Power, even though there is news, but we are not seeing long built up. In fact, we are seeing some sort of short built up, at the upper level. So it is like, and it is also at its congestion zone of 250 to 255. So very likely it is likely to witness some selling pressure from current levels and retest to 20 odd levels. So look out for the same. That's it from my side. I'd like to ask the fundamental team to take over, please.
Good morning. On PTC India Financial Services, three independent directors have resigned, and they have stated that reason for resigning is lapses in corporate governance and compliance, which is negative for the stock. Chola has announced that it will be launching three new business divisions. Currently, it is present in vehicle financing, uh, home equity, which is LAP, and housing loans. And now it will be, in addition to that, it will also launch consumer and a small enterprise loan, which will focus on personal loan, professional loans, and MSME loans. It has also entered into partnership with fintech companies like Bank Bazaar and Credit B. Second division it will open is secured business and personal loan, which will include the main focus on self-employed non-professional segment. And last segment which they will open is SME loan, where apart from long-term loans and working capital finance, they will also include equipment finance and supply chain finance. So net it is positive for the company, as this will accelerate the growth for the company and also reduce the dependence on auto segment vehicle financing, which is almost 75% of the loan book. So it is positive for the company. ICICI Lombard result was below expectation. Gross direct premium income increased by 16% year on year, although because of a higher OPEX, profit was flat year on year. Also, combined ratio was stable at 104.5%. We are neutral on the stock. Sterlite Technologies result was below expectation on both revenue as well as margin front. Revenue declined 10% quarter on quarter and increased just 3% year on year. EBITDA margin was negative. The main reason for a poor result was that company made one-off provisions on two old projects, and that resulted in this kind of result. And even if we adjust for this one-off provision, the underlying pressure on margins was visible. Even then, margins declined sharply, both QOQ and year on year. The reason they said is that because of shift in business mix towards the project segment. So overall negative in the near term for Sterlite Technologies. Thank you.
Good morning, everyone. Yesterday, Rallis India announced their results, and results were broadly in line with expectations. Sales grew by 10%. However, margins were flat at 10.7% versus last year 10.5%. The erratic monsoon season this year has not favored the agri input companies, especially Rallis, as excessive rainfall continued in Q3 in the southern states. Also, the company faced supply chain challenges, and that made the certain intermediates availability a challenge. And also, there was steep inflation in the prices. So all this has led to this muted or the flat EBITDA margins. We believe that the stock would be muted in today's trade. Syngene International announced their results, and results have improved YOY. Sales grew by 10%, and EBITDA margins were flat at 28.6%. However, due to the anticipated project deliveries in the fourth quarter, the company has increased their revenue guidance for the full year to high teens from mid teens. So that's a positive, and we expect the same in today's trade. CCL Products has announced their results, and results were broadly in line with expectations. The sales has grown by 43% to YOY, and EBITDA margins have came at 22% versus 23% last year. We are positive on this company and expect the full year to be better. And we have a con call for CCL today, and we'll get to know more details about it. However, we remain positive on CCL. Thank you.
Yeah, good morning, everyone. LTI has posted above expectation numbers for the quarter with dollar revenue coming in at 553 million. Growth was majorly led by growth in volume, and growth is supported by growth in all the verticals. EBIT margins expanded 74 bips Q on Q, majorly led by higher growth, operational efficiency, and cross currency movement. FY22 saw the highest growth year since listing, and the management remained confident on being in the leaders quadrant and having a stable PAT margin of 14-15%. Overall, management indicates that the demand pipeline is strong with the robust deal pipeline, and however, the supply side challenges continue. Outlook is positive on the company. Aptac has posted decline set of numbers for the quarter, although revenue has improved 9.6% Q on Q. However, profitability of the company was impacted. Tejas Network has posted decline set of numbers both on the revenue and the margin front. Mastech has posted okay set of numbers for the quarter with dollar revenue coming in at 73.6 million versus QOQ of $72 million. 12-month order book stood at pound 715 million versus QOQ of 719 million. Even EBITDA margins came in stable Q on Q at 21.1%. Stock is trading at 34.6 times TTM EPS. Thank you.
Good morning. JSW Special Product reported its result, and the result was okay. Revenue came at 1473 crores, down by 2.5% quarter on quarter. EBITDA came at 92.5 crores, up by 11.8% quarter on quarter. Margins also saw some increase at 6.3% versus 5.8% sequentially. Uh, yeah, that's it from my side. Thank you.
Good morning. So CEAT announced its results. The results are below expectations. Revenue grew by 9% on a YOY basis, but it declined on a sequential basis by 2%. EBITDA margin, however, was lower at 6% from 15% on a YOY basis and 9% sequentially. This was mainly due to higher input cost, higher commodity prices coupled with subdued demand for replacement tires. The company, however, indicated that there are going to be price hikes on its range of tires over the next couple of quarters, but the pressure on margin will likely continue in the ongoing quarter. The demand for truck tires in the replacement market was muted during the quarter, but the car and two-wheeler replacement demand fared well. The replacement market accounts for two-thirds of CEAT's revenue. International business did well, while demand from automakers was also slightly muted. So we are negative on the stock. Bajaj Auto also announced its results. The results were in line with expectations. The revenue was margin grew by 1% on a YOY basis and 3% sequentially. EBITDA margin, however, was lower at 15% from 19% on a YOY basis and sequentially 16%. This was also due to higher input costs, which weighed on the margins. However, a strong performance in the overseas market and steep recovery in the three-wheeler business will help the company deliver improved performance in the coming quarter. Thank you.
Yeah, apart from that, JSW Energy reported results which were ahead of expectations. Even Tata Elxsi, which day before yesterday reported very good number in con call yesterday, has indicated positive outlook for coming period, and the momentum which they got in last few quarters is likely to continue. One positive thing about Tata Motor, what they had said as the JLR is the largest customer of Tata Elxsi, that the problem of semiconductor is easing out, and Tata Motor is likely to report good sales in the current quarter, that is the fourth quarter, and as such can be positive for Tata Motor in coming period. Apart from that, results for next Tuesday, that is 25th January, Apollo APL Apollo Tube is likely to report numbers, and numbers are likely to be more of a flattish quarter on quarter, whereas Supply is again likely to report numbers, and this number is also likely to be more of a flattish. Margins are likely to remain around 22%, which was the case in last quarter as well, and revenue growth year on year will be around 5%. So result will be more of a flattish. Finolex industry is likely to report declining set of numbers. The margins are likely to come down. Last quarter they reported around 28% margin, and this quarter it is expected around 22, and last year it was 32% margin. And sales is also likely to be more of a growth of 8-10% in the quarter on quarter and year in year both. So sales increase is nominal, and margins are coming off sharply. So results is likely to be declining. Then Maruti Suzuki is likely to report number. Quarter on quarter, the results are likely to show some improvement. Quarter on quarter, the volume has increased by around 13%, and the revenue is also likely to increase by around 13%. And margin is also likely to increase by from 4.2% to 6% in this quarter. So quarter on quarter, there are some improvement signal from the Maruti Suzuki, though it still is far up from its normal level of around 10% EBITDA. And Pidilite industry is likely to report improved set of numbers. Revenue is likely to increase by around 25% year on year, and EBITDA year on year will show some decline because last year EBITDA was quite strong and ahead of what the normalized EBITDA. But quarter on quarter, if you see the EBITDA margins are likely to show some up move. So overall result will be improving. SRF again is likely to show improvement in the results. Revenues are likely to increase by around 40% year on year and 6% quarter on quarter. And margin is also likely to show flattish trend over year on year, but quarter on quarter it will show improvement of almost around 200 pips. So results is likely to show improvement for SRF. Then Symphony is also likely to report numbers. This is comparatively not a great month for seasonally growth, not a very high number month for Symphony. But anyhow, last year the base was quite low, so on the lower base, company is likely to report better number. Team Lease is also likely to show improved numbers. Quarter on quarter revenue and EBITDA are likely to increase by around 7-8%. Torrent Pharma, more of a flattish type of number are likely to be reported. And United Spirit is likely to report okay set of numbers. Revenue is likely to increase by around 14% year on year. And margins are also likely to remain flattish year on year. So quarter on quarter, it will show some decline on margins. So more of a flattish type of number. Apart from that, the other two companies which are likely to report number are Canfin Home. Here, the numbers are likely to be more of a flattish. Quarter on quarter, there will be some improvement in profit before provisioning of around 4%, but at the PAT level, it will be more of a flattish or marginal decline. So numbers are likely to be more of a flattish for Canfin Home. And Federal Bank, if we see the quarter on quarter, there is a good improvement. We already know that their advances has grown by around 5-6% quarter on quarter. And
Subscribe to our
NII is
YouTube
likely
channel
to
for
increase by
in-depth
around
interviews of
5%,
India
and
Inc. and
PBT
press
is
the bell
likely to
icon so
increase by
that you
around
do not miss
13%,
our
and
updates.
PAT is likely to increase by around 6% quarter on quarter. So quarter on quarter, the company is likely to report improved set of numbers. So that's all from us. Thank you very much and have a good day.